Rare signal never seen in Bitcoin history. Here's what it could mean. You heard me right. Never seen this in Bitcoin history. Hey guys, it's Keith Allen, and I woke up this morning and saw something. I literally, this is not just something I've like dreamed up was rare. I've been looking through the charts, and let me get rid of this music for you. I've been looking through the charts and went all the way back to the beginning of time for Bitcoin and have not seen this signal occur not once. I mean, this is so this isn't just rare for Bitcoin. This may speak to the youth of Bitcoin as an asset class, but this signal is so rare that it's only happened twice on the S&P 500 since 1979, and like maybe 8 times since the beginning of the S&P, which incidentally is like, we're talking 150 plus years of history there. So I should preface this analysis by saying that the timeframes matter because I found this rare indicator that appears to be potentially a positive sign on the weekly Bitcoin chart, but I only found it because I was analyzing something that looked pretty nasty on the daily chart. So let's start there, I guess. And I will open up with, and we will, in this analysis, get to order book liquidity and fire charts and look at some of the other elements impacting the price action, including today's economic data, which has given us a nice little bump today, which the market seems to be giving back at the moment. But we have had a series of events here over the past couple of weeks that have been a bit of a concern, I should say. And that would be the death crosses, right? No secret that we've had these death crosses. There were 4 of them in a series of 9 or 10 days. Boom, 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 boom. And today, here is number 5, the 100-day moving average death crossing the 200-day moving average. This doesn't happen a whole lot either, by the way. But when it does, it tends to lead to bottoms. Now, does it just establish the bottom as the local bottom, or does it go further? That remains to be seen here. So we're going to look at this a bit, in depth here. First, let's go back in history, and I'll start at the beginning. I'll start at the beginning of time. How about that? For Bitcoin, dating back, it took 200 days to actually have a 200-day moving average. And then the first time that we saw this occurrence on a death cross between the 100 and the 200 was back in 2011. And we saw a double bottom here, right? That wasn't too deep. We had already bottomed out, price recovered, retested support, double bottomed, and the bullishness began. All right. That would be nice to see right here. Here's another one. Back in 2014. Similarly, death crossed. Price had already come close to a bottomed a couple days after that, consolidated for a little while, reestablished support here on a double bottom, consolidated its way out, and then climbed out before peaking and ending it, right? We saw a breakdown from there. But where was that breakdown indicated? That I guess that breakdown was confirmed here on the next crossing in later in 2014, which really validated the bear market at that point. We did have a bounce that came off again, another double bottom, spiked up, had a rejection. So I want you to keep this in mind. Rejection came from the 100, crossed the 100, but rejected from the 200 as well. And that was bear market territory. That was the confirmation that the bear was in control. And it took until we had, look at this, a double bottom of support here to get things turned around. All right. So now we move into the next bull run. And when did it occur? It occurred after the 2017 top. And this was a validation that the bear was in control. But when did we get that validation? Not until we bounced after a brief consolidation and retested resistance here at the 200 and rejected. Just like we rejected back in the other one, the rejection here was a sign. This was coming off of a market top. This was a sign that the bear market was in full force. So we now proceed to 2019. Coming off the 2019 top. Same thing. Double bottom on a test of support, climb our way out, and then get this distribution rally. And then what happened? This is, in my opinion, had COVID not occurred, this is where the market would have bounced from, and it would have done what it did, right? But instead, we got this black swan out of COVID, took us down, and that really created a whole new dynamic for this cycle, in my opinion. But what's noteworthy here was that this death cross did confirm or validate the bear market. It came with a pretty significant drop from that point. Was what, another 27%, and double bottom support before climbing back out. And then this was, nobody could have forecasted this. Now we go to more recent history, 2021, death cross. Look at this, triple bottom support, and out we go to a new all-time high. Coming off of a mid-cycle top. I want you to remember this mid-cycle top as well. Very important. And then our more recent was the validation of the bear market here, where we again saw a death cross between these two moving averages. We had a double bottom where we got a brief rally, but here's that now third rejection, just like the others, rejected from the 200-day moving average and validated that the bear market was indeed here to stay. We've now, of course, recovered from that. We bottomed out and have had a nice run here. So where did this come from? Well, here was the crossing, another crossing of these two moving averages, another death cross. This one was minimal, right? This one was coming from a consolidation zone in this 25 to 30K range. We did go down and test support one more time, and that ended up being our bottom here. And that's what kicked off this run, this incredible run that we've had really since October of last year. And so we obviously recovered those unwound, and we had this death cross now again here. This is the fifth death cross of the week. And this death cross between these moving averages hasn't happened a whole lot. So here's where things get interesting for me. If we look at the weekly chart, and this is also why I say time frames matter, okay? Because if we look at the weekly chart, we're going to get some perspective here. But what you can gather from this is that this death cross specifically between the 100 and 200 do tend to lead to bottoms. Again, the question is the bottom a local bottom, right? Is it already in? Is it, the double bounce that we got off of 58 here yesterday? Is that potentially it? Because on fire charts, we did see a nice little bounce here. Look, we had a spike down to 58. We came back up. We tested again. We actually tested twice, tested again, and then yesterday popped out of it. And then this morning on that economic news, we started to see price appreciate out. Now we have some ask liquidity coming overhead to suppress us again. So there's that. But back to the weekly chart, and if things hold here, that would be impressive. But I would think, based on what we've seen on these other double bottom tests, that a retest of this support line of support here at this lower low might very well still be in the cards. Now we've got a monthly close coming up in just a few days, right? It's coming on Saturday. So we also expect some volatility around that. We expect some more volatility around the economic data that's coming this week and what's coming next week. Hey, Enzo, good to have you here. Going well for me. Been a busy morning. Glad to finally have a chance to get in and do this live Bit Break live stream for you guys. Hope you're doing well. Appreciate you following along. And by the way, for the rest of you, I hope that you're getting some value out of these. I always forget to do the housekeeping, right? So hope you guys are getting some value out of these. And if you like them, you'll smash the buttons. Make sure you hit that subscribe button up above so you don't miss any of these lives. And please share this with your friends and communities so that we can grow this channel and I can continue to pump these out for you guys as well. Hey, Alexander, good to have you here. Appreciate the ongoing support, man. As I was saying, these tend to lead to bottoms here, right? So would this be it? Was this little 58 deal bounce yesterday? Is that really all we're going to get, or might we see more? Like I said, we have much more economic data in the cards here to digest tomorrow as well, and we have next week big stuff coming out. Right, coming out next Friday. I can give you a glimpse of that real quick. Today, the bounce today really came from I think the unemployment report. Also, the GDP was slightly better than forecasted. The initial jobless claims came in a little bit cooler than forecasted, which calms some of those fears about the hard landing recession. On the 4-week average as well, a little cooler than expected. So that has a lot to do with what's going on in the market here. Obviously, the other metrics also, this one didn't do so well. The goods trade balance means that we are importing more than we're exporting. So that was probably the most negative out of everything else that was in here. To me, the GDP news positive and the jobless news positive. Tomorrow we have core PCE. That's a big one. Personal income and spending. These are all big metrics here. And then the really big stuff. By the way, market closed on Monday. Don't forget that. Market will be closed this upcoming Monday for the U.S. Labor Day holiday. And then next week we're going to see more key data, namely the unemployment numbers will be coming out. We have non-farm payrolls coming on Thursday, but on Friday of next week, we have unemployment rate coming out, and that is a big one, right? The market is fearful that we're going to see a big spike in unemployment. I think it's expected that unemployment is still going to rise, but maybe incrementally, hopefully not a big spike. Fed Chair Powell had told us that they do not welcome large spikes in unemployment at this stage. So cutting is going to begin in September to help quell that. So back to the charts we go. Again, I'm wondering if we still get this test of support down here to really give us a solid double bottom, or if that breaks and we end up, maybe we get a bad unemployment number and we go down and we test this trend line. Nothing is off the table here in the Wild West of crypto, my friends. So now what is that rare signal that I've never seen? That rare signal appears on the weekly chart. And what that is, all right, you can see what we just highlighted on the daily. The rare signal on the weekly chart is this right here. This, my friends, is let me get the right tool so I can circle it. This is a golden cross, the opposite of the death cross. The golden cross between the 100 and the 200-day moving average, where the lower moving average is climbing above the higher moving average. All right, you can see this happening right here before your eyes. Guess how many times that's happened in Bitcoin's history? Well, let me just cut to the chase. None, absolutely none. So this has never happened. So we don't have any history that we can go, oh, well, this is how it typically, how price action typically responds to this, because we don't have any history of that on the Bitcoin chart. But what we do have is the S&P 500, which has about 153 years of history to pull from. And on this chart, we can look at the weekly and see that, what happens on these golden crosses. Okay. So let's go back. Here's the last two The last two going back to um, about 2005, it looks like. So on these occasions, we had on this one, and I'm just going to pull this out. You get the gist of things, right? On this occasion, we had this golden cross here, and price coming off of, and it's worth noting that these tend to happen within clusters of daily crosses, right? So on the daily side, we had at this point um, some death crosses on the daily, right? Just like we have on the Bitcoin chart, there was a cluster of death crosses. You see the 21-day moving average crossing below the 50, the 100, and bouncing off the 200 down here. So there were a bunch of death crosses in lower time frames here, but what resulted was a golden cross in the. And while I'm on this time frame, I'm going to show you this on the other one as well. You can see it here, right? Lots of nastiness. So the continuation of that downtrend occurred until it bottomed out, and then we got we got the correction. Or that was the correction, and then we got until we got the recovery. So there's a chance that we still see some of the momentum, the lagging momentum of the death crosses still coming into play until Bitcoin establishes its bottom and recovers. What we're seeing today really maybe that volatility a function of the economic data that we saw, but I don't really anticipate the real move to happen until we get past the monthly close and we get to next week's economic data. Most specifically, the unemployment data is what I'm really looking at the most. But if we go back in history, we can see that these did actually lead to eventual recoveries into an extension, the next leg up, if you will, right? So here it is back in 2011, and I mean, off to the races here until the COVID crash. And of course, we all know that the S&P is now at all-time highs, making a new all-time high pretty much as we speak. It looks like. And if we go back in history and look at these, let's see where it's happened before. Here is another one. We have that downward momentum continued a bit further here back in 1976, the bicentennial. This was a long time ago. Obviously, things a lot different now. But I don't know what the circumstances of this downtrend were. However, we do know that after this cross, price found its footing and recovered. Same here, recovery, boom, correction, but then off things went. So here's a double bottom too on this correction. That is interesting to see. And if we go back in time, I think there's a total of 8 of these dating back to the beginning of the S&P. Obviously, a lot has changed. I don't even know if it's worth looking at, but you can see here's that golden cross between the blue 100 and the red 200. I'll even click out the others to make it easy to see. Here's the recovery. Boom. Next leg up. Boom. Next leg up. So there you have it. Very rare signal, never before seen on a Bitcoin chart. A little bit of history of it on the S&P chart. And if that is any indication, not saying that it is, but if it is any indication, then that speaks volumes for the future potential of Bitcoin from here. So what could happen between now and then? What could possibly go wrong between now and then? Well, anything and everything, I guess, in this game. But I want to kind of wrap this into the context of other things that are happening in the market and the price action that we've had and are seeing develop right now. So yesterday, it's worth noting that we had talked about this this Kingfisher chart and the liquidations that happened. I had been eyeing, and let me try and adjust this for you guys. Oops, sorry about that. I've been eyeing liquidations in that 59K range, and they were taken out. They were cleaned and beyond. Went down to 58 actually. So it actually went a little bit further than I was anticipating at the moment. So what we have had since then, obviously, some of those have replenished off of the bounce. But look at this: um, we have a stack of leveraged shorts here that are at risk of getting liquidated. And if price is still above 60K, which is good that we've recovered 60K. That was a bit of a battle over the past 12 hours or so. Um, but now let's assume that this is the next ripe target, right? The low hanging fruit is to squeeze these shorts and liquidate them. Does that mean we just go up to 62, or do we go grab these up here to the 64 and a half range? Well, this is a pretty important level, and I want to show you why. First of all, I do think that these will get taken. I'd like to see them taken. And then, of course, we have this next cluster. Let me show you why this level is so important. Let's go back to the chart and look at what is at that level. That was 64.5 that I was talking about. So there's a couple of things up in this range. One is this mid-cycle top from the 2021 mid-cycle top. Okay. That is something that could come into play on this weekly close. We want to see a weekly close up in that. Monthly close rather. Weekly close would be good too, right? Monthly close is coming on Saturday. Weekly close on Sunday. So where do we end up here? If we end up closing up high here near resistance, then that keeps this doji hammer intact. Doji hammer is often a sign of a trend reversal. That would be welcomed. Clearing this 2021 top for the close would be kind of a big deal, because we need to do that. We need to incrementally work our way into these next ranges, right? This 2021 top has been an absolute beast. We've not been able to sustainably hold a move above it. We've tested it dozens and dozens of times. So, in my opinion, we need to just go one level at a time. Reclaim this 2021 mid-cycle top, then go after this, consolidate up here, and then we have a shot at a sustainable move towards all-time highs. Until we print full candle bodies above this 2021 top, I just don't think that there's a sustainable move to take out this higher high. Yes, we could conceivably take out the higher high, but can we go after this all-time high? I don't think that happens until we are printing full candles above here. So before we can get there, we got to do this. And so that's the one thing I'm looking at. The second thing I'm looking at is this right here, the purple 200-day moving average. As I showed you on the other chart, as I showed you on the S&P chart, running into, actually, I even showed it to you on the Bitcoin chart, on the Death Cross chart, is running into that 200-day moving average, and not being able to cross it is not a good sign. So if we face a rejection of the 200-day moving average, that could indicate something more severe. That could indicate that either the bottom isn't in, or worse yet, we've topped. So for the cycle. And so can't commit to either of those until we see how things develop, right? But I can tell you that I'm watching this really, really closely. I think that is in range. It's certainly in range, especially with those liquidations there ripe for the picking. But if we face a rejection here and can't maybe hold the 50 and then get back up, at the very least, hold the 21 and get back up. We popped through the 21 day this morning, and we're fighting to hold on to it. So these are signs of weakness, right? If we can hang on to it, that shows some strength. If we lose it, that obviously shows some weakness. And so I want to see us hang on to this one. We spent a long time a couple of weeks anyways, trying to reclaim the 50-day moving average, and that didn't last more than a weekend. So this is concerning, right? We got to take this out and then go after this and hopefully break through it. I'm okay if we consolidate up here for a little bit and then, between the 50 and the 200, and then go after it. But what I don't want to see is a hard rejection that sends us back down, potentially to the trend line. Now, if it sends us back down here to the 50K level, and we get the double bottom that I think we all really want to see, um, that to me is more substantial. This was hard to call. This was hard to call a double bottom, but we do have some at least a bit of consolidation down in that range. This is the double bottom I really want to see, um, and to me, the even stronger move for the next leg up would be a bounce off of this trend line. So now let's put this up in context of other things that are there. Yeah, Alex, definitely interesting that we've got this golden cross on the Bitcoin weekly chart. We do have to wait and see. Patience. If I've learned anything this year, this past year, it's probably the biggest thing is patience. So in the context of everything else that's going on in the market, we always like to take a look at ETF flows. Here's the shocker. ETH had a marginally positive day of flow yesterday, thanks to BlackRock buying about $8.4 million worth, and Grayscale only selling $3.8 million worth. But this was a bit surprising. I would think that coming off of a dip like that they would be doubling down on the Bitcoin ETF. And in fact, BlackRock was flat yesterday. Kathy Wood's ARK B sold for the second consecutive day, as did Bitwise. And so Grayscale, they just bleed. That's what they do best. So that was a bit surprising. Going to be interesting to see today with this recovery. Perhaps they buy again. So we'll be watching for that at the end of the day. Economic data, we already kind of covered that in the context of what's going on. So we do have another round of reports coming tomorrow that could give us another blip in either direction, quite frankly. And of course, what we talked about happening next week, and most specifically on Friday, when we have on September 6th, when we have the unemployment rate posted. So that could have a big difference too. And we looked at the liquidation map. I think that comes into play. We talked about where we close here this month, the monthly close coming on Sunday. And I think that this is where things get really interesting, right? Because we have this monthly close, we could very well have a fake out and then get to the unemployment report next Friday, and then have a different set of results. So we'll be watching that very, very closely. As I said before, my big concern is something for in terms of a rejection from this 200-day moving average. If we can get above it, then I think that if we can get above it, then I think the bottom is in. So we'll be looking for that. Going to wrap it right there, guys. I hope this one has been informative for you. It was fun to do. I always like when I see something new, right? So that's a rarity that we see something new like this. So hope I'm giving you some insight that you can use. At least put that in your back pocket. You've got the knowledge, you know what to look for, and I hope that you will use it to trade wisely, my friends. As always, going to wrap it right there. As usual, if you like the stream, hit the like, hit the share a comment, and I promise I will respond back, and we will do it again tomorrow. If I see anything develop between now and then, of course, I will chime in and give you guys some a heads up of what I'm looking for, or what I'm seeing anyways. Hey, Anthony, I appreciate it. Thanks for following along. If you guys like them, pass it along. And as always, have a great day.